When it comes to your backdoor Roth IRA strategy, you need to make sure that you don't pay tax on the same dollars twice. If you paid tax on the same dollars twice, that is going to negate the entire purpose for going to all this trouble to make the traditional IRA contribution, convert it to the Roth IRA, and then do all the proper reporting to create that tax-free bucket. How do you end up paying tax on the same dollars twice? It can happen because you're not staying on top of what actually happened behind the scenes, and you're just using the tax documents that get generated. And let me explain what I mean by that. When you make a non-deductible IRA contribution, you are putting the money into a traditional IRA. You know that you're doing that as a non-deductible contribution, but the custodian does not know that. They just know that you have made a IRA contribution to a traditional IRA. Then when you convert it from the traditional IRA to a Roth IRA, the custodian just knows that you've done a Roth conversion. And the way a Roth conversion gets reported is on a 1099-R as a taxable distribution. It is normally a taxable distribution for most people. If someone is saving in a regular traditional IRA and they're not doing that as a backdoor Roth strategy, well, they're getting to deduct that. And then when they convert, they're paying tax on that traditional IRA to settle up on taxes that they never paid. Well, when you're doing a backdoor Roth strategy, you already paid the tax before you put the money into the traditional IRA. So it's not taxable when you then convert it. The amount of money that you already paid tax on should not be taxed a second time. But the form that you get from the custodian is going to say that it is a taxable distribution because it came out of a traditional IRA to go into a Roth IRA. And it's just going to say that the basis is not determined. They'll check that box because they have no way of knowing, did you deduct it or did you not deduct it? They don't file your tax return for you. They don't know how many IRAs you have. There's a lot of information that the custodian does not have in order to know how should this be treated on your tax return. You have that information. So you have to keep track of what money did you contribute on a non-deductible basis so that you can properly report how much of the conversion is taxable. Now, if you're just setting this up from the start and it's your very first traditional IRA and you put that non-deductible contribution in and then you turn around and convert it pretty quickly, then the only money that will be taxable to you would be if it made a little bit of gain or interest from the point in time that you set it up until the point in time that you converted it. And that would be a small amount. But the amount of money that you contributed on a non-deductible basis would not be taxable again. However, those forms, as I said, don't report that because the custodian doesn't have that information and the IRS doesn't have the form set up in a manner to report that kind of information. So you need to be sure and either enter it into your tax software properly or let your tax preparer know that this is what you've done so that it can be reported properly so that you don't pay tax on those dollars a second time. That would absolutely negate all of the trouble you've gone to use the backdoor Roth strategy. So make sure that you're keeping those records. Now, in my next video, I want to talk about another rule that can trick people up, and that's the pro rata rule. So be sure and subscribe so that you can get some information on that. And as I said, I want this information to help you determine, will this strategy help you be on your best path for your retirement?